Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at the Aussie versus US dollar. So let's get started. I'm going to start by taking a look at the daily chart. And this yellow area right here, it's a sort of a runway, if you will, goes all the way back into 2022, September 2022 to be exact. And there's a number of different reasons for this yellow area, and they correspond with different swing lows and swing highs. I'm going to outline some of them through here and here and here and here and here. You can see these are all floor levels here that form the floor. We did break below the floor and try to use that level as a ceiling, or that area as a ceiling, then broke back above and used it as a floor once again and a floor once again. In the month of August, what have we seen? We've seen the price move below the lower end of the floor and also above the upper end of the floor after breaking below that level. Also near the floor is the 61.8% retracement of the move up from this low to this high. That level comes in at 0.65468. Now, if you look closely and you look at the high price that we have here today, it's below that 0.65468 level, and that may be a barometer for the price action going forward. If we stay below that level, the sellers remain in more control from a tactical perspective, and maybe we see further selling momentum and not this up and down price action that we've seen in the month of August above and below this swing area between 0.6546 and 0.6595. So we're going to be paying a close attention to that 0.65468 level here today. We know we have China CPI. It's going to be an influence, but keep that level in mind. Let's drill down to the hourly chart. And when we look at the hourly chart, we can see that 0.65468 level is not only a high price today, but we did correct back up to that level toward the close in trading and found willing sellers against that level. So the last 3 or 4 hours have seen a ceiling against that level. It seems like the traders know it exists and want to keep a lid on the pair there, keeping the bearish bias. If it doesn't break above that level, we're still going to need to get and stay above the 100-hour moving average. That's the blue line in this chart. It currently comes in at 0.65527. And I know the price has traded above and below it on a number of different occasions over the last few trading days, but still getting above it is more bullish, and we'll see if we can accomplish two things: one, get above the 468 level, and two, getting above the 100-hour moving average. That would increase the bullish bias for the Aussie versus US dollar, and then we look for other upside potential targets, including the falling 200-hour moving average, which hasn't been the price hasn't been above that level since going back to this day, back on July 28th, 27th. So that would be another key target on the top side. So, but right now, if I were to characterize the market, it's more bearish. It's more bearish below the 468 level. It's more bearish below the 100-hour moving average. And as long as the price remains below those levels, the sellers remain more in control. And we look for target levels, including this low right through here, and then the low price that we saw in trading yesterday down at 0.6496. Remember, we are below that 61.8% retracement on the daily chart, below that swing area on the daily chart. That is all bearish. That is bearish for this pair, and we can't underestimate what might happen if the price is able to stay below that level and we're able to continue this move back to the downside. A key target on the downside might be this low price for the year, which came down at 0.64587. So sellers in control. We'll see how it all plays out. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.